Well, on one hand, it could be a bit surprising. I mean, we look at global growth. We don't focus on how great growth is in Europe. I mean, yes, the numbers were better than expected, but we're still at a relatively low rate. I think there's an anticipation on one hand of cuts coming from the ECB, which is going to be ahead of the Fed, so that's good. And that better than expected growth. So as equities do, we're looking towards the future. I think, generally speaking, investors are seeing a brighter future ahead for European markets, and they're reflecting that now.
So what investors and what they're doing is quite key here, because we know they've been driving up US markets. We've seen some huge valuations on certain stocks as well. Is this breadth coming into the mix here where investors are seeking out other assets that might have been left behind, or is there something specifically European around the earnings and the macro?
I think there's generally a global factor, and as far as the breadth is concerned, I mean, it's changed a bit recently with the movement in interest rates, but you've actually had most markets moving up, in similar trajectories. So if you look at Russell Value in the U.S., even compared to NASDAQ, compared to Europe, they've been within a similar range. So I think there is this very key global factor, and then we go into some of the things that are specific to Europe, because now you do have Europe outperforming a lot of other markets, which you don't say very often. So hopefully those factors will continue. It's really going to come back, frankly, to what the next U.S. data that we get, and whether or not then you see U.S. equities also start to leg up much more than they have recently.
Let me go back to an old hobby horse of many, especially those companies looking to list, is that you just don't get the same bang for your buck on European equities. Well, given we've got a global investor base as well, why should European equities be trading at a discount to their peers? They always do,
yeah.
But why should they be?
Well, I think fundamentally it comes down to earnings growth. You just don't get, generally speaking, the same earnings growth in European corporates the way you do in the U.S., or certainly if you look at U.S. growth.
Because of the underlying growth of the continent.
I think a part of it is going to be GDP growth. I think it's just much more differences in management style, labor market regulation, and so on. But it always comes down to what's the price you're paying for that growth. If you pay a relatively low price for relatively low growth, that may still be a better investment in the long run. So I think it's as much the relative multiple. What are you paying, say, for U.S. growth versus European growth? And right now, that's actually a fairly wide gap.
If interest rates are cut this year, and I say that with respect to our Swiss and Swedish friends, because they've already got their cuts as well, or the first part of their cuts as well. If the ECB, the Bank of England, and the Federal Reserve are going to cut, let's say 1 or 2 times each. Let's be quite conservative about this as well. Some people think 3 or 4, but let's say 1 or 2 across the board as well. Is that enough to keep the equity story on the uptick? Or actually, will it propel it because people start looking at the relative value of equities compared with some of the other stocks out there, or other assets out there?
It certainly should. On a relative basis, you're right, you're going to see a lower discount rate. That should be higher prices. It'll come down to what's happening then on the growth side. So we can kind of figure out what the implication is of the earnings, of the interest rate change. I think what we're all still struggling with is at what point, given that we have had and will have still relatively high interest rates for a while, we know monetary policy works with a lag, do we see a bigger slowdown in growth later on? And that's still very much an open question, a risk to that outlook, the positive outlook for equities. But if that doesn't happen, if it's a nice recovery in Europe, then really that's a pretty nice combination.